right, everybody. It is June 2018, and this is the DFW Note Closers Group. I am really excited to be able to meet with the, I guess you want to call them the Revival Brothers, the King Brothers. They have come out with this fantastic new product called the Ideal Project Analyzer. It's going to help you analyze your note deals, analyze REO deals. It will look up a lot of the due diligence that you need, and it will analyze your ROIs on a variety of exit strategies so that you can compare them all in one place. A lot of times we get a little overwhelmed going, okay, well, now wait a minute. What was it if I wholesaled? No. And then if I did a little bit of rehab, this has it all in one place. And when Joe and Shawn start taking you through it, not only are you going to notice how well they have programmed this, but you're also going to notice how much they really know their stuff when it comes to real estate investing. I think a lot of times you have a program that is either designed by a programmer who knows nothing about the underlying business, or designed by someone who really gets the business but has absolutely no idea how to program anything and make anything user-friendly. So I think you'll be really excited about the great combination of those two successes or experiences coming together into one package. So that is my lead in. I see, Joe, you're sharing your screen. You ready to go?
Can you guys see my screen?
Yep.
Okay. So Ideal Project Analyzer is an application that was developed by investors for investors. And when I say that, we're not just your standard investor. We've been investing for the last 10 years. We started out as REO investors and then migrated to the note industry. And in doing so, we took our experience in analyzing deals to that arena as well. And this whole application started when we were at PaperSource about 2 years ago. We were walking around looking for an application that would actually do what the IPA does today, and that's analyze assets, first position notes, and REO at the same time, because we have both types of products. And we couldn't find anything, so we sat down, we started developing an application. In fact, I can show you some of the early applications and what they looked like when we started. When we started, it looked like this, like any other Microsoft Excel application that anybody would develop. And then it just kind of grew over time. And then eventually colleagues in the industry saw it, they saw what we were doing and how it was working. And they convinced us to take it to market, and that's where we are today. So with that, I think what I'm going to do is I'm just going to jump into the application itself and talk a little bit about the overall concept behind it, how it works, and then we'll go into an actual project, one that we're working on currently right now, to just show you how we use it and how you might be able to tap into it as well. And if there's any questions as we go through this, please feel free to ask. So with that, I'm gonna open up basically what you would see if you purchased the application, and that's just this front sheet. What this tells you is that you've purchased the automation package. It's unlocked. In this, we have videos that we're currently working on. They're not completely finished yet, but they will be in the next 2 to 3 months. These videos are going to be designed to walk you through the application and show you shortcuts, tips and tricks, and give you a better understanding of how to use the application for different exit strategies. When you get into this main application screen, all you need to do is click on the Start Investing Here icon, and it'll bring you to an input sheet. This input sheet will ask you for an address. So you simply type in an address in here. You tell it whether it's a note or an REO, whether it's occupied or vacant, And then if it's a note, you fill in the note details, the unpaid principal balance, and all the other particulars related to it. For speed purposes, I've gone ahead and done another spreadsheet here that has that information already filled out. But when it's filled out, you click the Analyze button. It takes you to the Analyzer sheet, and this is what you get. Does anybody want me to just kind of go through the whole thing and type this out and show you exactly how it works, or is it okay to skip forward?
No, I'd love to see whatever you guys got. This looks dope.
Okay. Well, I'll go ahead and type it in then, just to give you a better overall scope of how it works. I just don't want to bore anybody.
No, it's pretty cool watching all the fields fill themselves in as you wait. I really like that.
Yeah, and I mean, it's only 8:15 East Coast time on a Wednesday night, you know, talking real estate. So it's all good, you know.
Yeah. So I'm typing in an actual project that we just purchased recently, and we're going to go through how we analyzed it. So I just entered the address. This is a note, and was this occupied or vacant? This is vacant. This was a vacant note. The UPB on it is $76,498. And then I'm just going to go ahead and paste this information in. This is mortgage, the P&I, the interest rate, the note term, the original balance, the origination date, first paid date, and next due date. All this goes into the calculations and understanding how to reperform the note. So once all this information is in, we simply click the Analyze button. It takes us to the Analyzer sheet. And from here, what it does is it copies in the address, as you can see here, and the fact that it's a vacant note. And it also copies in the UPB. That's all that first sheet does for you, and it sets the tone for the whole thing. Now, the only other thing we need to do here is click this button here. If you purchase the automation version, it is just that. It's for automation. So what we've done is we've created a system here where we have your cost breakdown in this investment column. We have due diligence in the middle column, and in the right column here, all the exit strategies. So typically when we start a project, we start out looking at the due diligence. We want to gather the information. We want to understand this project before we dive into the actual numbers. So all we really have to do is click this button here, Fetch All. And we tried this yesterday, and it took a little bit of time. I'm going to go ahead and do that right now and just show you what it's doing. It's bringing in the project information. You can see here it's brought in lot size already, the square footage, the bed bath count, the county. It's in the county of Harris, the parcel number, the address. Now it's looking for an image. And this is a good example of if there's no image online, it will actually report we can't find an image. And if you do have a photo of the project, you can actually cut and paste it in here fairly easy, and I'll show you how to do that in a second as well. But see, it just reported back image not available. Now it's going to go and it's going to look for the e-values. So it's going to go to some of the more popular e-value sites out there like Zillow, iComps, HomeSnap, Trulia, Realtor.com, and it's going to pull their values. And then once it pulls their values in, it's going to take an average of all of those numbers to come up with an average value. And the ARV that we're calculating up here, once it's all done, it'll calculate an ARV. What it's going to do is it's going to take an average of these e-values. So it's going to take this average number here. It's going to also look at the comps when it brings in the comps, and it's going to take an average between the price per square foot on the comps and the average value on the on the e-values, and then that's how we'll get our ARV. So it's a really good conservative way to get a value. We found that the values aren't too high and aren't too low. They're kind of right in the middle. And when you check them against a realtor, we found that almost 95% of the time it's fairly accurate. And in fact, in some cases, we found that this is more accurate than some of the BPOs that we're getting. So, you know, there might be some exceptions, but this for sure is getting the job done for us. Now, right now, what you can see is it bringing in demographics. So it just brought in crime, income, schools, population, unemployment, and market temperature. It's pulling this information from several sites. It's pulling it from Realtor.com, who's recently come out with data that you can tap into that looks at different zip codes and gives you a reading of how hot that market is. You know, how many sales you have per month, per week, and reports it back against other zip codes in the same region, and then it looks at that region against, you know, a larger region or a state, and then the entire United States. So it actually gives you a good base point for how well the market's doing. Again, trust but verify. Always check with your realtor on everything. But again, this is a great starting point to launch into the due diligence of a project. Right now, it's looking for comps. Go ahead.
Well, I was going to ask. So it's currently processing to you know, obviously pull out the data for this, which is fine. So at what point do you actually plug an asset into this if it's going to take the process as long, or is it taking this long because obviously the call is happening, or you kind of get my question, is this something that'll speed up over time, or like how do you you know, if you're looking at, you know, obviously a tape of X, right, but you're considering maybe 6 to 10 properties, you know what I mean? Like how does that, what's the typical amount of time it takes to kind of run through this and all that? You kind of get my question?
So typically this takes anywhere from 1 minute to 4 minutes, and it depends on your internet connection. It also depends on whether or not the information is out there online, because if it's not online, it'll continue to check until it finds something, and if it doesn't, then it'll report back as not available. So the idea behind this was that with all the data that it's collecting, you know, it's going to about 10 different sites and pulling hundreds of pieces of information from those sites. So it takes a little bit of time to pull that in. Once you have the data in here, which is really what takes the time, everything else is dynamic. So all the numbers, all the calculations and everything works pretty flawlessly. So I'm going to go ahead and cancel this and just bring up our other sheet that we already have completed. Well, looks like we have an internet glitch here. Hold on 1 second. Sorry, guys.
It's okay. You're running Zoom and you're running the web.
No, this is bogging down here.
Yep. I don't think many people will be doing their due diligence while they're watching a Zoom webinar. So I think most people will be okay with the time.
Okay. All right. Let me just launch back into it. Okay. So sorry about that, but you know, again, when this thing gets bogged down, sometimes we have issues. But again, pulling all this information takes about 1 to 4 or 5 minutes, depending on your internet connection. This project that we currently purchased was one of those that didn't have certain information we had to go out and find. I think HomeSnaps came back with not available, and we went out and actually found the value. So the other thing that I'll say is that once these values come in, it also brings in the link for everything. So if you want to check something like Zillow, for example, you can click on this and it'll automatically bring the address into the link and show you the value that it just pulled. So in this case, 116,000 was the value, and you can see right now it looks like it changed from 114 to 116. So this happened over the last week since we ran this. So this is a good point to bring up because these values change all the time. And if you want to actually check the value, we've created these buttons across the top to update these. So in this case, if we wanted to update these values, we'd go up here to get e-values, and it would process those e-values and bring them in and replace those numbers with the number that we just saw here, 116,000 value for Zillow. And then it'll replace all these as well and update them. And once that's done, we can update the overall numbers within the entire system because it's all dynamic. So let's give this a second. You can see that 116 from Zillow came in. So again, I'll just show you right here, 116,440, 116,440. So it pulled it right off of Zillow, brought it in and updated everything. So now it looks like the values have gone up in a week. So now we're at 106,000 for our e-values. And down below, we have our comps that came in at even a higher value. So what we're doing is we're taking the values of these comps and calculating the price per square foot, and then taking that price per square foot and multiplying it against the square footage of the property. We take that value and then average it between these two to get our ARV number. Right now, we've conservatively set our ARV number to 100, but if we wanted to automate that, we come up here to the top and we calculate our ARV, and now it's just taking an average between these two. So now we're looking at 128,000 potential for this project. This is the point where we would want to get on the phone and talk to the realtor and verify that number is true. And if it's not, we can come in here and we can tweak these numbers however we want. And as we do that, you can see everything change dynamically in the system. So I'm going to go ahead and leave it at the recommended ARV. So what we see now is an ARV of 128,000, and if we come down a little bit, we see an offer price of 29, and you're probably wondering where that came from. Well, the system auto-calculates an offer price for you based on a percentage of UPB, in this case because it's a note. So if you wanted to set the percentage of UPB at a specific rate, you can come down to the assumptions down here and set that number. So right now we have it set to 55% at default, and that's a pretty good average number for making an offer on a note. We come up here and we can calculate an offer based on that 55%. So when we do that, it changes to 42,000 and 55% of UPB. So now we're looking at $128,000 value with an offer price of 42. And in this case, if we come over here and we look at our graphs are telling us in the yellow time, and in the orange, it's our values. So we have ROI, return on investment, we have profit, and we have capital invested. So what we want to do is we want to take a look at the least amount of time and the most amount of profit. So when we come over here to the reperforming section, we can see that the time is about in the middle of everything. Obviously, if you foreclosed on it, it's probably going to be the least amount of time. But if you reperform this note, it looks like you do pretty well. It looks like there's according to this, there's a $32,000 profit to be made in 13.8 months. If you reperform it on the capital invested, you're looking at a $49,000 investment, again over 13.8 months, and on the ROI, you're looking at 54.9%. So over here in this column are exit strategies. You can click on these buttons here to bring up all your different exit strategies. And typically, we'll go from the time that you purchase it, you know, what can you do right when you purchase that note? Well, you can flip the note. So if we come down to flip the note and we click on FN, we can actually see up here what we could potentially make on that. So there are other parameters around flipping this note as well. So if we wanted to, you're gonna have to show this real quick. I'm sorry. I'm gonna introduce you real quick to Shawn because he's one of our programmers behind this, and he has all these numbers dialed in. He can actually show you really quick what relates to what.
Hello, everyone. How's everyone doing?
Good. Thanks for joining us.
Hear me. So basically, I was going to walk through the reperforming side, the flip note side, and the foreclosure side, how this all works. So as Joe was saying, that you first want to take a look, okay, what does it look like if we want to just quickly flip the note? So we have a section here called flip note. And so at a flip note, you can set what you want to sell the flip note at a percentage of UPB. So let's just say here we buy it, like originally is what we purchased this at. So this was our purchase price on this particular note. It's a 39% UPB. So if we want to actually sell it, we can probably maybe get 55, maybe 60% on this if we go sell to the market. So right now we have it set at 60% and a benchmark of 3 months to sell it. So, but you can change these numbers to fit your investment criteria. So as you can see here, here's the 60% that you're going to sell it at, and this is the 3-month period you're going to give it to sell it. And as a result, this is the investment returns that you're seeing. So you're looking at possibly a net profit, maybe 12,000 at a 60% of UPB resale. Okay. So now, if you say, well, you know, we're not going to flip the note, we're just going to see what we can do to reperform it. You got to maybe in touch with the bar. There's other parameters involved with this one. So in the input sheet, here's your note terms. What this does calculate, it's not going to actually, this is the payment that you're getting from the actual tape, okay? So the seller gives you tape, and you're getting the payment from the tape. And there's an interest rate that you're getting as well. So what this will do is it'll actually recalculate that payment based off the term and based off the interest rate. Because sometimes, from our experience, the payment is inaccurate. So basically, it's just going to calculate an actual payment, and your payment will be right here. Okay. So for the reperforming side, what it does, it actually will pull in the original loan amount, and then it will actually give you an estimated payoff. Your estimated payoff is pretty much simply your estimated to reinstate the loan plus the unpaid principal balance, which is up here. So that gives you a kind of an estimated payoff. So here's the reperform note assumptions. So to reperform a note, you can input the assumptions, how long it's going to take to reperform the note and go sell. So here we have 12 months. Then you can say, okay, what percentage of UPB do you want to sell it at? Right now we have the parameter set at 75. And this section here is past due amount collected. So all that means is that to reinstate this loan, it's going to be right around $18,000. Well, what the borrower doesn't really have $18,000 to reinstate the loan. Let's just say maybe they have 10,000. So you can simply put 10,000 here. And what will happen is that the difference between the 18 and 10,000 will be added to the back end of the loan amount. So the repayment of UPB will be adjusted, and the back end amount will be adjusted as well when you go sell the note. So it will actually readjust everything for you, and then this is going to be your estimated sell price at a 75% of UPB, and then this is your returns on the investment and the profit. Okay, so you have flexibility when it comes to the reperform side. And in the event that you are not going to be able to get the full amount, however, you can work a deal out with them. So the last thing I wanted to go over is the foreclosure sale.
Shawn, before we move on, I want to ask a couple of questions.
Okay.
In your reperforming module here, if you want to call it, that's really just taking the existing loan as is and getting them paying again. That's not really, it's not a modification.
Correct. It does not do.
Not a loan, yeah.
It
It's
won't.
not a loan mod.
Yeah,
Okay.
with the loan mod, there's going to be a lot more moving variables, and we have not incorporated the loan mod aspect to this when it comes to.
Have you guys thought about that, or is that not on the potential development plate just yet?
No, it's on our list. It's just a matter of figuring out how to incorporate it in, because there's some complicated calculations that go into it, and to make it dynamic like all of this it takes a little bit of time. So it is on the list though.
Okay.
And we are looking into it for sure.
Another question. You have it pricing notes based off of the UPV. A lot of folks price their notes off of the fair market value. It doesn't appear that you have a way to change that field currently. I'm assuming that's probably on your development list too. Do you think people could use this if they're trying to figure it out based on fair market value? They could just change the UPB to calculate that. They could change the UPB on the input sheet, and then if they wanted 55% of that, that's what would come up.
You know, one of the things I should probably bring up is that the reason why it's calculated by the UPB is because we typically make offers associated at a certain percentage of UPB, and so UPB becomes a big, I guess, focal point or analyzer point for us in the whole structure. We do also do calculations based off of ARV. And if we were to do an REO calculation, for example, the REO would be based off of the ARV, not UPB. In fact, UPB wouldn't even come into the picture.
Well, there's go ahead. Sorry.
Okay, so the other thing I want to show you is this: to say that you're upside down on the property. Say the value is, for illustration purposes, let's say the value here is $60,000. So right now, this is set at, this price now is adjusted at the 50% of ARV. So what you can do, if you're upside down here, this right here is now switched to offer of ARV because you're upside down on the property. So now you're going to do 55% of the ARV. So if you go calculate offer, this will switch to 55%. This is your offer now, 55% of ARV. So once you're upside down, so the value is lower than the actual UPB, it will adjust to, you will be pricing it based off the ARV.
It automatically does that for you.
I like that. That makes perfect sense. And that's gonna, we've spent so much time in the industry bidding on underwater assets that everybody is just looks at the FMV and works off of that. And if there's a ton of equity in the deal, you're going to overbid and you might not notice.
Yeah.
So it's nice that this sort of has your back.
Yeah, it was, you know, while developing that, that's kind of what was, we had to think through the aspects of the upside down scenarios. And so we wanted to have it automate itself between the UPB versus the ARV if it is upside down. So that's why when you scroll down here, it automatically changed. So when you get this ARV, and if it was upside down, it will just be here for you.
Just change it real quick.
Gotcha.
So now if I change it back to 120, it'll change to offer percent of UPB. So
nice.
Because you're no longer upside down.
But yeah, so I think that you know, to get to where you want to be, there's several ways you can look at these numbers. And like you had mentioned before, if you wanted to just use the UPB as ARV, you could do that as well. But the system has certain safety nets built into it as well.
Yeah. I like the idea that it's a safety net, not something I need to game to try and make it work my old fashioned.
Right.
That's cool.
And Shawn went over the foreclosure sale. Again, as we go through these exit strategies, we click on the exit strategy radio buttons, and it brings up your returns associated with that. So at any given time, you can switch these, and it'll show you your overall ROIs. In fact, look, on the foreclosure sale right now, it's telling us what our foreclosure sale is at minimum bid, and so at 31,000 on our minimum bid, we're looking at a 75% ROI. So if we come down here and we look at this, and Shawn kind of briefly went over this.
No, I didn't go over this part just yet.
Oh, you didn't? Do you want to go over it?
Yeah, let me go over it real fast. So basically, one of the neat things that we incorporated is when you go to a foreclosure sale, you kind of have the top end number, the maximum bid. So basically, this is for those people that want to gain possession back of the property and possibly go into wholesale or fix and flip. But let's just say there's enough juice in the deal where you can probably allow that bid to go a little bit less than the max bid. So what we've done is we have made a minimum required return on your investment. So let's just say on any deal you just want to go 30% out of foreclosure sale. What this does, this tells you what your minimum bid price will be to achieve a return of 30% of the foreclosure sale. And then this will tell you what your projected profit would be. So you can play with the number to achieve to whatever profit you want to get and to whatever return investment you want at the foreclosure sale. But it will not exceed the max bid or estimated max bid. So let's just say, you know what, I need on this deal, north of say 20,000. So 50%, does that get you there? Yeah, it's actually right there at 50%. So that way you can feel comfortable. Okay, I know at this level I can go into the foreclosure sale. Now, if they bid up, great. You'll know that they can bid all the way up to 94. So that's one of the neat features we added in.
Shawn, can you tell everybody how the 94 number is achieved?
The 94 number. So basically, the 94 max bid again is the unpaid principal balance plus whatever the estimated payoff is to reinstate the loan. So the estimated payoff to reinstate the loan in this case is $18,000, which is your arrearages, and then whatever the current unpaid principal balance is gives you your estimated payoff, which is essentially what the max bid is.
Okay. Does anybody have any questions about that? Because selling at foreclosure auction sometimes sounds real scary, but in reality, especially like a property like this one where it's vacant, this is actually a really good deal to foreclose on. And if we can sell it at foreclosure auction, we stand to make a pretty good return in a relatively short amount of time. So these types of deals are really interesting to analyze, and it's very difficult to analyze these unless you have a tool like this or really a lot of experience in understanding these numbers. So from that standpoint, the tool pays for itself the first time that you purchase a property and make that kind of return.
That's true.
Yeah. So moving on, let's say you went through the foreclosure sale, and it did not sell, and you took the property back. If you took the property back, now you have three different options. You can rent it, you can wholesale it, or you can fix and flip it, pretty much. You now are a property owner, so you have the option to look at what are these numbers true right now? 100 right here? Mm-hmm.
29.9.
I'm just putting the numbers back in. This is our actual deal and the numbers that we're working with right now. So with these numbers, we can see on a rental, that our annual ROI is at 20%, overall ROI is 65%, the profit is at 44%, and we're looking at a $67,000 investment overall. And this also takes into consideration your renovation costs, because with any rental, you're going to have a renovation associated with it, or some kind of cleanup. Whether or not you're going to spend $25,000, that's in question. In our experience, we've spent quite a bit less than what we would do on a full-blown fix and flip. So what we've done in this system is we've created an area that you can actually put a rehab number into for rental purposes only. So if we wanted to spend $10,000 on a rental, that would actually go and recalculate the rental based on that $10,000 rather than $25,000. So this is no longer in play with the rental. This is in play by default with the rental unless you change it. So I think that's pretty important to understand. And the reason for that is that if you wanted to look at a fix and flip, which is going to have a higher flip value, you want to be able to have the number work for both, or a separate number work for both. So as we can see with that lower number, it increased our ROI and our annual ROI from 20 to 31%. So, and it also, if we come over here and we look at our cap rate, now our cap rate's at 10.4%. Our recoup time to get our money back is at 5.1 years. So this is actually looking like a pretty good deal as well. Now moving on to the wholesale, what does it look like if we wholesale this at $65,000? If we simply did nothing, took this property back, turned around and sold it at wholesale, in an estimated eight months, maybe 9 months, we're looking at about 40% return, or a profit of $16,000, and our all-in is at 42. So one of the other things that I wanted to point out is that if you want to look at the costs or the cost breakdown for the overall project, we've actually included a cost breakdown of everything associated with the project so that you can understand what is actually going into it at any given time. So this actually helps to pull all those little pieces together and really start to understand what's going on. And check your numbers too. You always want to check your numbers. Check our numbers. Make sure that we're honest. We've been checking them for about 2 years now, so hopefully we got them right. And then moving on to a fix and flip. If you were to fix and flip this at a $25,000 reno, in some cases this might go up to $45,000. It depends on what the inside looks like, because most of the time when you buy a note, you have no clue what the inside looks like. You're making an assumption based on the exterior. You're also making an assumption based on how long it's been vacated. When we approach a vacant note, we always assume the worst. So we're putting in 25 to 30, sometimes 40,000 on these renos. It depends on the state you're in as well, and how much it generally costs in those states to do, bathrooms and kitchens and, paint, flooring, in some cases roofs. We want to stay away from properties that have bad roofs and foundation issues, but if it's just straightforward renovation with maybe a little bit of plumbing here and there, a little bit of electrical, looking at bathrooms, kitchens, and like I said, flooring, paint, then it's a pretty good deal. We've also incorporated in here a renovation budget. So if you wanted to automate that number, like you're not really sure what it's going to cost to renovate, we've come up with some price per square foot numbers on a low, medium, and high renovation. So if you think this is going to be like a low renovation, something that you're not going to spend a whole lot of money on, the estimate's set at $17 a square foot. We can come back up here and we can calculate that reno, and it'll automatically calculate it based on that $17 a square foot. So it's telling us a low reno on this would be about 29,000, which changes our overall ROI. So you can see how we can play with these numbers, and as we change these numbers dynamically, everything changes. And then you can dial in these numbers as you work through the project. So we've purchased this project, and we're still going to use this system to manage this project, because as we go through it, we might have additional attorney fees. We've set attorney fees at $5,000. Maybe there's less, maybe there's more. We can adjust this as we go along. And we can also change that number down here in our assumptions. Where's the attorney fees? Right here is, well, there it is right there. So as we change these fees, they'll dynamically change up here as well. And let's say that, you know, you're not going to have any attorney fees, and you know that maybe you foreclosed on it, and, you know, or you haven't foreclosed on it. You're doing you're flipping a note, or you're reperforming. You can click on these buttons right here, and it'll automatically subtract that from your bottom line. So you can take them off dynamically as well for a quick glance at how it'll affect your bottom line. So you can really start to customize the spreadsheet to your type of investment. So if you're looking at an investment of, let's say, 30,000 to 150 in that range, you can set these assumptions, and let's say that you're in a specific area, like let's say Michigan or Illinois or something like that. In that region, let's just take Michigan for example. You know there's going to be some winterization, right? So in Michigan, you're going to want to add some money for winterizing to make sure that your pipes don't freeze and whatnot. If you're in a vacant property, you're not going to have cash for keys, so you're gonna subtract that. You know, so you can fine tune this. You can fine tune these assumptions down here as a template so that you can use it over and over for your next project. And then as that project comes about, you can determine whether or not these are essential for you and turn them on and off. And then again, it'll affect your bottom line. You can also work with your realtor to understand how the market's changing as you move through the project. Because what we've noticed is that in some cases, we'll start off with the value of, I mean, right now the system's telling us this is a $128,000 value, but we've put $100,000 in here to be very conservative. So if we were to bring it back to the suggested ARV, you know, our numbers go up, and everything looks a lot more. It looks very good. No, let's just put it that way. But again, when you look at these, you always want to be conservative in your approach and understand that when you look at these graphs, you want everything to be in the positive. You want to make sure that when you invest, you're never going to be in a situation where you're going to lose money, but at the very least you would break even. How can you lose money on these investments? Well, you know, I'm sure Kimberly has probably already laid all that out for you guys and explained how that can happen. But there are many reasons. You know, you can have an earthquake, a fire. You can have a contractor walk off with your money. You know, and by the way, that's a whole nother discussion in how you deal with contractors and doing fix and flips. But I will say that, you know, through our experience, what we've done is we've tried to create a workflow that will tackle these exit strategies and allow you to understand them to a degree where you can move forward comfortably. The other thing that I want to show you real quick is a couple of other buttons we have across the top here. One is the contacts area, and this was meant to manage your project. So if you have a servicer on your project, or a contractor, or a realtor, you can add those. I'm just going to go ahead and add some gibberish in here just to show you how it works. No, sorry. So I'm going to make this guy an architect. And then once these are in there, you can add notes. So if I wanted to add a note from this architect, hey, we called today, whatever, I can add that note. I can add another note if I wanted to. Again, say whatever. I can say it was a meeting, it was an email. I can give the time. It automatically gives the date every time you say add note, so you never have to fill that in. And it will automatically, for all the notes, it will automatically copy the information in your note field. So what this does is it allows you to really manage your project and understand who you're talking to, and go to the context very quickly. We use it when we have to get on the phone real quick with a lawyer, and we have 20 projects going on at one time. We don't know which lawyer is which, and this really helps us kind of hone that in. And the other thing we have in here is a learning section for those that want to understand what some of the terminology, might not know what some of the terminology is. We have a bunch of definitions, acronyms, terms, all kinds of little tips and tricks in here as well that you can filter through. In the future, we're going to have tutorials in here on how to invest in different ways using the tool. So those will be available as well to, I think it's to the automation version. Some of the other versions don't have these buttons active, but that's all it's all explained in on the website. So, and again, if you guys have any questions, let me know, because I know this is a lot of information, and it looks really complicated, but in reality, once you understand the basic concept, it makes your life a lot easier.
Well, I think
it's designed to mitigate risk.
I think if people focus on, look at it as a tool that's going to make your life easier when you're investing. So obviously the due diligence part is huge. That saves so much time for everybody. Then you can incorporate and understand the different exit strategies, maybe one at a time, so that you understand how it's calculating it, where it's pulling fields, where if I change this variable, how it impacts all the different calculations, so that you can continue to understand the broad concepts as well as knowing what this particular deal is going to do for you in a fix and flip situation. So even if you're looking at this going, oh my word, there are numbers everywhere and I have no idea where to start, focus on the middle piece, because that's
right.
Data. That's just data. So.
Right. Yeah, so that's a good point. I mean, this in and of it, if this whole system was nothing more than this middle piece, it would be worth it.
I can't imagine. It's going to save me personally and my assistant so much time. It's absurd. Okay, so we have one quick question. You probably already said something about this at the beginning, but since I missed the start, I won't say who said that. Is this analyzer viewable by more than one person at a time to share with your business partner or with the person you're JVing with, for example?
So the way that this works is you're issued a license per purchase, and the license comes with 2 seats, so you can install it on 2 different systems. But any additional seats after that, you'd have to purchase. So to answer your question, you can use it on 2 machines, and it basically locks down to those machines.
Okay. And the next question from Ryan, is the Excel analyzer a one-time purchase?
Yes.
Yes.
It's a one-time purchase. We will be working on upgrades, not updates, but upgrades, which will have new features. Those features will be rolled out hopefully every year. And we have quite a few features planned for the next rollout. And then those features will probably come with some sort of upgrade fee. We don't know what that is yet, because we don't know how much it's going to cost to get those upgrades done, but or implemented. But it's kind of the old school model for software, rather than doing subscription-based stuff, which is where a lot of people are going today. And then the updates are pushed out for the entire year through our interface at the beginning. When you open this thing, do we have that? I was going to show the update function.
The update function.
Yeah.
So while that's coming up, you have to tell us the truth. How amused were you by the idea of naming it IPA?
What?
It's just kind of flowed.
Kind of flowed?
It fits really well.
You just sort of
Yeah.
chilled with it, is what you're saying?
Yeah, we were considering putting a beer mug for our logo, but
Yeah,
I
can see it. I can see it.
That's a great beer, I'll tell you that, though.
So when you first open the application, this is what you see, and you can create as many new files as you want in here, and name them whatever you want. You can organize folders. All your files will be organized in one area, and they're all going to be within the system. And this button right here, update, if you just click that one time, it'll go out and it'll pull the latest updated file from the internet, download it for you, and update your system. And that's all you have to do. So
Okay.
that's
Let
how
me
easy
just
it
ask,
is.
so in case I'm totally missed it while giving you a hard time, I can often miss things while giving people a hard time. So when you say the files, they are your IPA files, or is this each individual property you've analyzed files?
These would be each individual property. So
Okay.
you can have as many properties as you want in here, thousands if you want, but they'll all be in here. You can organize them however you want. We typically organize them by address, and then we'll have folders by state, and then we can go into those and
Nice.
open up whatever we want and start working on.
Okay. And how, let's say I have 10 different folders and 17 properties in each folder. How is that information, is there a way to back it up so it doesn't get blown up one day?
Yeah, you can copy the source files. The source files are actually located on we're going to have a video that we're going to bring out that shows how to do this. In fact, we might even incorporate it in one of the updates where you can back up your entire work folder to a USB drive or whatever. But if you want to do it manually, all you really have to do is go to the user file, which is located on your system under IPA. It's under a public folder under IPA. These are all the folders that are in there. And then in each of these folders, you would have, like for instance, right here, these are all the files in that folder.
Mm-hmm.
So what you would do is you would literally copy this IPA folder to a USB drive or back it up wherever you want to back it up, and then you have a backup. That's all you have to do.
That's pretty easy. Okay, so do you want to talk to everybody? IPA has 3 different levels, right? And each level has a different price and where they can go sign up.
Yeah, so we have, let's see if I thought I had it up here. Yeah. So if you go to revivalbrothers.com and go to the Ideal Project Analyzer IPA, you'll see a purchase area here. For you guys on this call right now, don't click on this button here and don't buy it through here because you're going to pay full price. I'm going to give you guys a discount. So what you'll need to do is you'll need to go and click over here under resources, and it might come up with a username and password to get in. In fact, I'll show you what will happen when you first get there, just so that you know. So if you log in, you're going to see this screen. If you try to go to this site, you're going to see this screen. And basically, what you need to do is just register. So you click on the register button, and we register here. You fill this out. You'll be signed up for our newsletter. And then once you're in the system, you'll have access to this to this resource page. And on this resource page, you'll see the IPA discounts. And we've included quite a substantial discount on this automation package. You can save up to $120. So this is a pretty good deal if you guys are interested. Now, let me talk to you a little bit about the difference between these packages. In the analytics, everything is based on speed. If you bought the analytics package, it would perform and do all the calculations, everything exactly the same. There's really no difference. The difference is in the automation and the buttons across the top that we were using. So in the analytics package, you really don't have much production or automation value in there. Everything you would have to input manually, including, you know, your values and looking up your different values in Zillow and all those different sites. You know, understanding, you know, what county you're in, all that kind of stuff. All that would have to be done manually and then input into the system by you. In the production version, all the calculations are automated, and some of the due diligence is automated from the standpoint that when you click on the buttons, it'll take you to that direct site, and where you can open it with the address in it and fetch the value and then input the value manually. In the automation, everything's automated. You click one button and it's all done for you. And that's where you really have the time savings. So it's really up to the individual and how much time they want to save. But all in all, the actual calculations and how it all works is pretty much the same across the board. One last thing I forgot to mention to you. Let's see if I have it still open here. And this is something that we added. And I don't think I told you about this, Kimberly, but we have this finance feature in here. So if you wanted to look at what if I financed this out, and what if I got a loan for, let's say, $15,000, you know, and that loan had a rate of, let's just say we got a hard money loan, it was at 12% or something. As we start to build this loan in here, let's say it's interest only, you can see that all these calculations are changing. So this works not only from a loan standpoint, but let's say you're doing a joint venture with someone, or you're doing a preferred rate with someone, and you wanted to understand what that would mean to your bottom line if you introduce that over a period of time, right? You can do that here and really start to look at your return on investment based on your leveraging power. So that's another nice feature that I think might be beneficial to a lot of people.
Yeah, I don't know that everybody explores the difference in how leverage can increase your ROI. So this makes a way to just go, okay, I like this ROI. What if I just make this one tweak? So we had a question about printing. I know you have a print button up here, but what prints when you click on that?
So if you click this print button, basically it'll take a snapshot of this entire sheet, and we use this to talk to our investors, to talk to clients or whoever that's interested in the project. We'll literally do a print of it, save it, and email it, and then we'll be on the phone with them in 5 minutes talking about the project in detail because all the numbers are here. So it makes for a really powerful conversation piece and communication piece for the project.
It's also nice when you're talking to a potential investor and they're like, so, you know, give me an idea of an average deal. You got this right there to show them for one that you've already done, and all your numbers are finalized, and that's great.
Yeah. So you can have your whole portfolio in your system. You can have a folder called portfolio or closed projects or something, and you can just, you know, open those up and print them, and then have those PDFs ready to go. So when you print this, you simply just print. Sorry.
I'm sure you mentioned it, but where does that logo get updated to? So I'm not
Sorry.
giant Revival Brothers logo at the bottom of my PDFs.
Oh yeah. This logo here, it's a logo that we've put in standard. We're working on a system right now. I don't know if we can do it or not, but we're trying to figure out a way to customize this logo to work with you know, with our clients. So you could put your own logo in, for example. So that's something we're looking at right now. We're going to be taking this out for the purchase version, so that'll be going away, so that you'll just have you won't have our branding on it at all. So
Sure.
I think that was probably what you were most concerned about, right?
Well, listen, I'm not concerned at all. You know, I've got investors that'll stick with me, but no, I'm just kidding. No, yeah,
Right.
That's dope, but
Yeah, you know, that's something that we're working on and trying to come up with some solutions to make it a little bit more robust for companies to put branding into it.
You know, for the short term, you could just give people, you know, a 3-paragraph explanation of how they could do that in preview for somebody who wouldn't be able to do it on their own, you know.
Oh yeah. Yeah, we plan on having a video for that, and you know, we're going to do videos for just about every section in here, so that it's very clear and precise as to how you do it.
Nice.
Yeah, I think that you know, if there's any questions that come up when somebody purchases it and starts using it, please email us or call us, because we're also putting together a fact sheet that'll go up on our website. So if people run into issues or have questions or general questions that are common, we'll have them posted, and people can kind of go through that
Nice.
and understand what some of the issues might be.
Okay. So I've already put your web address in the chat box. Do you want to put a phone number or an email address in there in case people have questions? Or do you want to just track you down through the website? What's easiest for you?
Sure. I'll bring the phone number up right now. There you go. So we have an 800 number. Feel free to give us a call anytime. And you can email us at info. This email address goes to both of us, so we both see it. So someone will get back to you fairly quickly if you email that address.
I noticed the email address is Brothers, even though the website is Bros. Is that correct?
Yeah, our domain, it's funny, when we first started our website, we were trying to make it short. So the domain originally was developed as Bros. And then as the brand developed, it became Brothers, and it was hard to reverse the website to Brothers because of the nature of the site itself. So
Gotcha.
that's something that we're aware of. But either one will work. If you type either one in, it'll work.
Okay.
I just thought you got more hip over time. You're like, you know, we started as brothers, but now we're bros. Like, I just thought maybe.
Yeah.
They had a few more IPAs in it.
Yeah. Now we're bros, man. We're bros. No, I love it. Fantastic.
All right. Well, I think we covered everybody's questions. Oh, wait, one more. Do you provide ongoing support or just for a limited amount of time?
For everyone who purchases it, it's ongoing support. So, yeah, if you have questions or issues, just give us a call or email us. There's actually, in the application itself, there's, I think under the Learn section, there's a support button. So you can click that and contact us directly, or again, you can call us.
Okay, great. This was awesome. I really appreciate you guys taking the time.
Thanks for having us.